Hello, good afternoon, everyone. Can you hear me well? All right, so today's topic is audit risk and it's exam-focused discussion. We are going to start today. I hope you people have revised the last lecture well, which we studied. So let us start discussing audit risk. Okay, so students, audit risk is the topic. So you might be thinking we are going to study F8 again, right? It is not the case. The audit risk, basic knowledge is same, but here application is quite different. Application is quite different. I'm telling you, that's quite different. Yes. So audit risk is basically the topic. Audit risk is the risk. The main risk to the audit. What can be the risk to the audit? That the purpose of audit is to report on financial statements, credibility of financial statement. This is the purpose. And what if, sorry, what if my audit report, which is to be issued, may be inappropriate? The risk that the audit report issued may be inappropriate. That risk is called audit risk. Because this is a huge, very big risk that you are going to issue an audit report after a whole process, and it turns out that whatever you said that was not good. And first of all, the first impact will be the legal risk, reputational damage, consequences in the form of fine, penalties, and so on. Now, the next is, so audit risk. Auditor wants to reduce audit risk to an appropriate low level. I didn't say auditor wants to make it zero. I didn't say that. Auditor wants to reduce this audit risk to an acceptable low level. Yes. And that acceptable low level depends upon how much risk is acceptable. It depends upon professional judgment. of auditor. Professional, again, you see the first thing, this is limitation of audit as well, by the way. Then we say, what are the limitations of audit? So this is the limitation of audit as well, that we are saying it is dependent upon professional judgment of auditor. And professional judgment, what that is? So it is basically it is judgment developed that of auditor with the knowledge, experience of work. And now auditor has some sound analytical ability to understand the circumstances, to relate things, to segregate things. Okay? And then make a decision. So we said that audit risk, how much is acceptable? That depends upon professional judgment of auditor. So that professional judgment is basically, of course, very important thing, that how auditor will reduce this risk to acceptable low level. So components, what are the factors which are giving rise to audit risk? Those factors need to be identified. And then those factors should be, or you should try to fix those factors. If they're fixed, well and good. Now, so the first factor is risk of material misstatement in financial statements. Risk of material misstatements in financial statements. Then what are the chances that financial statements may contain a misstatement which will be material? So all those risk of material misstatement, if this risk is high, overall audit risk will be high as well. If this risk is high, overall audit risk will be high, I'm telling you. Yes. Now, so the first component, let me give you one example, a practical life example. The accident on road, risk of accident. It can happen because of road condition, other people on the road. You may not be at fault, but still accident can occur. Because you have to drive your car on the road among those variables which are not in your control, which is the job of other people. Okay, so risk of material misstatement in financial statements. Financial statements are prepared by whom? Directors. Board of directors has this responsibility. Although they have delegated it, given it to finance sector, but this cannot be delegated. So if their financial statements are misstated, board is responsible for that. They cannot say, we have delegated to finance sector, so we are. No. They cannot say that. Now, next point. So risk of material misstatement. That management has prepared financial statements, and if financial statement has a high risk of material misstatement, so higher risk of material misstatement, so ultimately audit risk is high. If auditor does not detect those, so audit risk is high. It is just like that road of condition, other people's job. And then comes the detection risk. This is because of auditor, your own driving skills, your own care. Poor the condition of road, you will be more careful. You will be slow down your speed. Okay, it will happen technically, practically. Same. If financial statements have a high risk of misstatement, you have to be more careful while auditing. So risk of material misstatement, it arises. It arises because of inherent risk. What is it? If I ask you two questions. One, how inventory is recorded? Tell me inventory valuation criteria, a rule. Or I ask you for impairment loss details, how they are calculated. Or intangible asset related some question I ask you. Or IFRS 9, financial instruments. Where do you do mistake? Here, because they're complex. Detail criteria. So many tiny details. Okay, and judgment is also involved over there in the impairment. In inventory, there are less chances you will do mistake because that is straightforward, lower of cost and NRV. That's it. Same is the case of the management. Now, by default, chance is that they may do some mistake. So some items in the financial statements has by default or nature, they have chances of misstatement. By default. That may be nature, maybe complex items, judgment is involved, or their bias is involved. Management bias sometimes. My bonus is based on profit, and I am recording some expense which is related to amortization. My bias is there. I may not record that expense properly. High chances are there. I may not do that. Problem will be there. Now, so the point is, so by chance, complex item where judgment is involved, bias is involved, complex accounting treatments are involved, they are most likely to be misstated. So because they're by default thing, this is present. Now, the next is control risk. So misstatement can occur because of poor controls. Authorization is not there. Anyone can access any data, change, manipulate. Data is transferred from one system to the other without proper systematic way. So chances of misstatements will be there. Now, the next is, so control risk is because of weak control, poor control, design, implementation. People are not following the control. So control weakness. Something may be misstated. Again, it is because of the management. They have to implement the control. So risk of material misstatement in financial statement. That something may be misstated due to inherent, complex treatments, judgment, bias, or control weaknesses. That collectively call as. So their criteria, recognition criteria, valuation base, measurement base, or disclosure may be inappropriate. May be inappropriate. If there is any confusion, any question, you can ask. I'm going to proceed further. The next point is control risk, detection risk. It is a new audit client. We are going to audit this company for the first time. So we may not have knowledge, appropriate information, financial affairs, may not have understanding. We may not be able to plan and perform work properly. New audit client. Client is in record burnt, record not available due to some disaster, shortage of time, unable to obtain evidence, detection risk. Now, so audit risk is equal to risk of material misstatement into control risk. Now, so this is the function, very interesting. This is called risk model. Now come here. Yes, so this is given here. Significant risks. Students, all detection significant of risk. Which risk is significant? Significance, all detection risk are significant because that is related to audit detection of material misstatements. All detection risks. Then by amount, how huge amount is involved? By nature, where accounting treatments are involved. For example, by nature, IS 24, example I'm giving you, related party transaction. Amount is small, nature is huge. So significant, magnitude, nature of the item. So they are called significant risks. Okay, now. So what are significant? Transaction, yes, for which multiple accounting treatments are acceptable. Where complex model, complex accounting treatments are there. Okay, qualitative disclosures. Okay, changes in the entity, acquisitions, mergers, disposals, they are significant risks. Now, students, this was the topic. Now exam relevant discussion has been started. We discussed in the last class 3 benchmark of materiality. Anyone can tell me what were the 3 benchmarks of materiality? Can anyone tell me, please? Three benchmarks of materiality. Yeah. People are sending me individually. Send to all. No one will say anything to you. No one can harm you. Okay? 1% or 2% of total assets. I don't know what happened to my Mauritian students, especially. They are very much touchy about public exposure. Okay? So I received very good results when I asked them, okay, can I post it? Oh, sir, Mr. Hamzah, don't post our name. Okay? I failed, one student, he failed 6 times, AAA. 7th time he came to me, he passed 58 or 60 marks. I told him, can I post your name? That your feedback? Sometimes without my name. I don't know. Anyways, so 0.5% to 1, people are so judgmental. Okay. This point I need to discuss. Anyways, right now we study, I will discuss. Okay. 0.5% to 1% of revenues. And then 5% to 10% of profits. These 3 you need to memorize. So since I am going to proceed towards exam answer drafting. What I told you, three pillars. Tell me three pillars of AAA preparation. Tell me, everyone, three pillars of preparation of AAA. Tell me, please. Anyone? This is not good. If you don't tell me, it is shocking for me. I want to hear from you. Three mandatory things to be done. Exactly. One student has done it. Thank you. Thank you. I was just worried. No one is telling me. No, 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 no. Three pillars, three building blocks, I told you. The first foundation is that of knowledge. Yes, conceptual knowledge. Thank you. Another student spoke. Knowledge. The second block is that of application of that knowledge to scenarios. And if you do both, still you fail around 40 to 40. I'm sorry. Or saying, naming the word failure is even not good. Okay, 40 to 49. The third building block is, that is, I am going to mark it red. Demonstration of application of knowledge. Some students do blunder. They start from preparing this. They prepare it very well. A bit of this and a bit of it. By luck, they can pass if you find those points in the exam where your knowledge was okay. Okay? The real sequence, it is not the right sequence. 1, 2, and 3. Demonstration. Students come to me, Mr. Hamzah, I know everything. I have solved the whole exam kit. It's okay. Show me how you solve. How did you solve the question? Practice. Some came to me this time even. I gave this time students 40 questions. I will give you to you people as well. 40 benchmark questions, which must be practiced under exam condition. I said, this is minimum. This I give normally 1.5 months or 2 months before exam. Okay, if I give it now, people will stop studying and say, okay, we will follow only this. This is unfortunate. So I gave them 40 questions. I say, okay, solve it under exam condition. Improve your write-up. Mark your answers. Read reports and correct your answers. Every next question. They say, I solved 10 questions out of it under exam condition. Remaining, I just wrote the points. I said, okay, that's why you are here today. Again, I'm sorry. They come again and again. Some fail 2, 3 times, but they don't follow the advice. So remember, I am warning you. I wrote an article on it, small, that why students fail between 40s. I mentioned this thing over there. You cannot pass if you don't spend 80 to 100 hours on stage 3. After doing this can be done 40 to 60 hours. Knowledge. But this additional, students say, I have done it. Man, real game is starting now. You have done only some basics. It is just like the gray structure of a house. You cannot live inside. No furniture, no finishing, no electrical work, nothing. Can you stay? Live in the house? No. Same is there. Demonstration. You say, Mr. Hamzah, I am thinking the same. But please, you are thinking the same. You have to translate on the exam window as well. And I am starting today about the same. So you have to be very much attentive and learn this. Now tell me, before I proceed, what is the difference between audit risk and risk of material misstatement? What is the difference? Tell me, please. If I ask you, what is the difference between the body and the leg? It is part of this. It is whole. It has other limbs as well, the body parts. So remember that. So audit risk, all legs are part of body. Body is not only leg. So all ROMM are audit risks. But all audit risks are not ROMM. Because that includes detection risk as well, other things as well. Now, next point. The next point is students, how to write about audit risks in the exam. How to write. So, in exam, the question on audit risk or risk of material misstatement is tested in two ways now. One, they ask you evaluate significant risk of material misstatement in financial statement of a company. Evaluate and prioritize. Prioritize. One way. But another type of question is being tested since last 3 attempts. In 3 attempts, it has been tested twice. One time it was tested, and 2 times another is tested in the latest 3 attempts. They give you a scenario, for example, why this is significant risk of material misstatement. Justify. Why inventory is risk of significant risk of material in this scenario. Okay, we will do that. No worries. The point over here is you need to justify whatever you are doing. You need to justify. Just 1 second, please. Okay, now, so evaluate, prioritize significant risk of material statement. In such question, we start with discussion of materiality. Materiality. There are 3 marks available on materiality, discussion, calculation, and justification of that. Now, so the point is how to discuss. In exam question, they tell scenario above. There is a what we call it exhibit in which questions are given. Email. They say that partner has advised you to calculate and consider profits as benchmark for materiality or sales as benchmark for materiality or as whatever they say. For example, for example, they said here profits and company's profits are 450 million. 450 million this year. So now we have to discuss in a certain way to gain these 3 marks. For example, the benchmark of materiality based on profits is 5% to 10% of profit. And here it is 2, 3 ways are there. It is 5% of materiality, 10% first of all. 450 million, that is 45 million. 45 million upper threshold and lower threshold is 25%, 22.5 million. Now, next, you have to choose one of the benchmarks, one of these as materiality. This or this, and you have to declare. So, at planning stage, for example, 22.5 million has been considered as benchmark, as planning materiality, like this. But now comes the justification. Why you choose 22.5 million? Why not 45 million? This justification is important. And you can give justification subheading here and justify. Just justification must be from scenario. You choose 22.5 million, you give appropriate, understandable justification. Another student, about same question, choose that 45 million, gave appropriate justification of that from scenario. Both will get marks. Justification. I repeat my words. Even a third student says, as per my opinion, it is 30 million. Calculated these two. So it should be kept at 30 million. Moderate in between and give justification of that. From scenario properly. This is very much important. Now, I'm telling you today from here. So once you have done these three things, you get 3 marks confirmed. Majority students, they either don't mention benchmark, or if they mention benchmark, they don't calculate both amounts. If they calculate, they don't justify. They miss any one of these three. These are not that much technicality. These 3 marks, straightforward in exam. And they're failing at 46, 47, 48, 49. You know, how unfortunate. So present, this is demonstration of application of knowledge, the way examiner wants. Now, so materiality should be clear. Further clarity will be there when we'll be solving the exam question. Right now, we are just discussing the things. Now, next. The next point is, in exam, I'm talking about the first type of question. Evaluate significant risk of misstatement. So audit risk of material misstatements or audit risk. The one of the best type to discuss, which examiner loves, that is accounting issues. Accounting issues are given. And these may be given in exhibits, discussion, paragraphs, may be given in financial statement extracts, may be given note in the notes to financial statements. At 3 steps, at all 3 places they can be found. Now it is your job to search for that. Now, The next point is accounting issues. Then the second type is generic statements. They have audit risk and risk of material misstatement as well. Statements. And the third is financial statements, analytical procedures. Analytical procedures on financial statements. Now, generic statements, I'm sorry. Now, so generic statements are normally, for example, they say it is a new audit client. I'm giving some example. New system introduced, new accounting system introduced. Okay, for example, bonuses, director's bonus based on profit. Company is newly listed, going to be listed. So we cannot create a comprehensive list, but I have given some example. So there is a risk attached with that, audit risk or risk of material misstatement. Now, how to explain them? That is another aspect. First of all, we are talking right now about identification. Explaining, we will talk about that. Analytical procedures, where you apply ratios, calculation, profitability, GP margin, net profit margin, and receivable days, payable days, sometime, inventory days. Okay, so ratios, comparisons of one year to the other, and you find something unusual, some unusual change. That may be misstatement. That may be misstatement. Now, the next point is the next point is we'll proceed further. Now, how to explain them, how to demonstrate the knowledge. Students, for each accounting issue, we need to discuss it is material or not. How? By comparing it with benchmark decided above. Yes, with the benchmark decided above. Next. The next point is about to materiality discussion. It is must. Then we have to think from the relevant, IFRS or IAS, whichever is applicable there. First step, second step. So, yes, in the materiality, one thing I forgot, it may be material by nature even. We have to consider that as well. Now, the second is think from the perspective of relevant IFRS or accounting standard and applicable there. That part of the IFRS applicable there. We need to think from the perspective of that and see and what we have to do and see whether given treatment, the two possibilities are there. Two possibilities are there. One, given treatment is incorrect, clearly incorrect, which is what management has done. So justify using IFRS extract and apply that to scenario to prove it is incorrect treatment. Justify. Second, the second is given treatment is silent. Silent. Question is silent about treatment or incomplete information. So there is so explain how it should be recorded as per IFRS, given the reference, and explain that risk of incorrect treatment by management in financial statements. Have you noted it down? Tell me. Have you noted it down? Tell me about your understanding. Any question, if you have any. Now, so students, and then the fourth step, sorry, 2 steps done. Third step, tell on its impact on financial statements of company. Which item specifically may be understated or overstated because of it? You cannot write misstated. Misstated is only acceptable if the above two specifically cannot be told. But if one of the above two specifically cannot be decided, it means both possibilities are there. Now, I hope it is clear. So, normally, materiality, treatment, applied to scenario, and impact. Materiality, treatment applied to scenario, and impact. Impact on file state, MTI. And you have to follow in letter and spirit this thing. You have to follow in true letter and spirit while drafting answer. If you don't write like this, you may find in 10 different ways answer written. But this is the structured approach. Now, so let us try to do some example from the past exam paper about it. Just give me 1 minute. Now, let me show you the past exam question. This is the past exam paper, 𝐀𝐻 company. And it is from the, if you see, I think 2023, March 2023, 𝐀𝐻 company. Let me send you this exam kit here in the chat box. Now, 𝐀𝐻 company. This is like this. You see, the both type of questions are here. Using exhibit 1, 2, 3, evaluate and prioritize the significant risk of material misstatement to be considered in planning the audit. And they said you are not required to consider risk of material misstatement to inventory here. 18 marks, this part. Exhibit 1, 2, 3. Exhibit 3 and 4 justify why inventory has been identified as significant risk. You see, justify. They said specifically, they told specifically. Now, so students, we will talk about, I have just shown you. Here they have told in the exhibit 1, for materiality, use revenue as your basis. Okay, so I will come towards it in a few minutes. trying to find some easy point for you people. We can discuss. Okay, read it. Read this point carefully. Now, so let us talk about it and learn how to draft answer. So I will simply copy this from here and will paste it in the Word document so that I can do its analysis in front of you properly. Yes. On 15th June, a severe storm caused damage to the company's dockyard property with a carrying amount of 108,000 and two boats which were being stored in the rented space at the dockyard by customer were severely damaged, but the damage has not yet been quantified. Okay. Now, Kevin believes that insurance will cover the cost of repairing and property has not adjusted the carrying amount of property in the fund statement. He has recognized a receivable and deferred income of 110,000 relating to the claim on the insurance, although the amount is not likely to be received until November year end. Now listen, focus. There are basically two issues. Two issues in exam we can discuss. The one is that is impairment of dockyard. Okay, the first. The second is deferred income on insurance claim. There are 2 points basically, and both are clearly incorrect treatments. Clearly, I told you, given treatment may be incorrect. How we will start? First of all, property materiality we will discuss. Okay, discuss the materiality. Overall materiality level. That 108,000 is the materiality, is the amount, and it is much higher than overall materiality level. So the value of storm damaged property at the dockyard is 108,000, much higher than. You have to compare with the materiality level you decided above. Okay, much higher than materiality level decided by the company. It is much higher than the material decided by the company for financial statements as a whole. So it is highly material. 1 mark. This is materiality. Now applying to scenario. The damage. Okay, first of all, what are relevant? Which IFRS it is? Which IAS? 36. As per IAS 36. As per IAS 36. Impairment loss should be recorded if carrying value of property is more than its recoverable amount. And recoverable amount is higher of its value in use in current condition and present value and its value in sale less cost to sell. Now, I have not yet applied to scenario. The point, it should be applied to scenario. It should be applied to scenario. How it should be applied? Come here. The dockyard has not the loss, the damage at dockyard has not been quantified. Now applying to scenario, right, by the company. Which means any impairment loss has not been calculated of the property as well. As property has been damaged. As property has been damaged, not recording the impairment loss if needed, you know that, because we do not know the damage maybe needed, means that property, plant, equipment in financial statement may be overstated and expenses understated. Understated. Impact justification. Now, next. The second is insurance claim, deferred income. Gavin is, I think, finance director. So, the loss suffered to property damage, loss suffered due to property damage is insured and company has recorded 110 amount as deferred income to be received through insurance claim. Insurance claim. Which is material to financial statement. As it is much higher than, never forget the format, overall materiality level. As we will proceed towards more and more example, I will keep adding more aspects of the answer. This is the basic format. We have to add different spices and toppings to it. Okay? So that's why you have to grasp what I'm telling you. Now, decided above. Now focus. Now, which IFRS applies here? IAS 38. Because they have recorded deferred income. Yes. Receivable. As per IAS 38. An amount to be received can be recognized. How? As intangible asset. If it is virtually certain to be received. Here, it appears from the information available that no formal communication regarding confirmation of receipt of 110,000 has been received by the company from insurance company. So it is not yet virtually certain to be received. So recording it as receivable is incorrect, clearly incorrect by the company. And companies' receivables and income, deferred income, both are overstated. You cannot write misstated here. You write misstated here, examiner would like to shoot you because you are AAA student. You are not F8 student. Even if in F8, it doesn't like it. And you see how persuasive it should be. Any confusion? Any question? Let us proceed further. So students, analysis, materiality, what IFRS says, and applied to scenario. This is very much important. Now, this is also incorrect treatment, clearly incorrect treatment. Because why it is, read it and tell me why it is incorrect treatment. Tell me if you can. Tell me. Shareholders gifted historic bought to company, and then there is no specific IFRS. It is investment by shareholders, seems like. It should be added to, not even now, it should be added to shareholders' equity. Okay. And they organize, instead of it is not income. It should be directly shareholders' equity. And property, plant, equipment, no, it cannot be taken to that. Why? Incorrect treatment. Why? Because property, plant, equipment is that equipment which can be used to directly or indirectly for the regular business of the company. It is being displaced outside the company's office. So it cannot be declared as property, plant, equipment. Okay, so let us do another question, some few more points from another scenario. So it is just start. Okay. Read it. Read it and think what should be written and how it should be written. This point. What is the risk of material? Yes, please. Student, if you learn it, what I'm teaching you right now, learn to apply and demonstrate, it will be a major breakthrough, I'm telling you, breakthrough in your preparation and passing towards AAA. So please focus it. What I said, should it be written? MTI. I'm telling you, listen. For example, overall materiality. Yeah, okay, right. First of all, I'm telling you that overall materiality level is 2 million, for example. For example, 10% of revenue, and these sales are for 80 million. Okay, these are 80 million. Right, materiality you can discuss. Now treatment, listen. This is annual healthcare plan. Now listen, IFRS 15 says you can record revenue only when performance obligation is satisfied. Here they are getting the full amount in advance. Okay. So what may be wrong here? What may be wrong here? Would you try writing answer like this, MTI? Would you try? I have already given you the principle, what IFRS 15 says. That revenue should be recognized only when performance obligation is satisfied. By performing the services, because here services are there. Please, I will give you 2 minutes, 2 to 3 minutes. Try writing answer on it. Be quick, please. If you do not do this try, you are not doing good to yourself. So 2, 3 minutes, take from me, write answer, open your laptop, type its answer, and share it with me in the chat box. Then I will tell you where you are doing mistake. Be quick. I'm waiting your answers. I have received one answer. So I'm going to analyze that because enough time is already gone. Under IFRS 15, you see here, there is materiality. Where is materiality? MTI. Where is the materiality? We have not discussed that. Incorrect. It should be there. Second, good. Very good. Very good application. No, cancellation, and this is, you are thinking too much. A bit more improvement is required here. So I will explain. Anyone else? Yes, one more answer is here. Okay. So, very good. Very good. Materiality. as per reference 15, performance obligation is satisfied. No, they have not said that. They have recorded. They said, no, they are silent on it. You can see. They are silent. They are not saying how they recorded. So you have to be very much careful. They didn't tell how they record. Okay, so you did mistake there. The company may have recorded. Okay. Okay, right. Now it's okay. But the point is how they should record it. How? A bit explanation is missing from it, in-depth analysis. Okay, now you see here, revenues. Okay, right. Now, next. Any other person who have written the answer? So I will write the answer now. So you see here, first of all, it is above the overall materiality level. Yes, materiality done. Now, so under a fifth, revenue should be recognized when the performance obligations are satisfied by transferring the goods, the control of goods sold, or by performance of the service promised. Okay, now this is complete line. Promised. In this case, the performance obligation is to provide vaccination and quarterly health checks over the course of the course year. Okay. Now you see, you have again generalized it. Not duration of the plan. You have already said over a year. So a bit explain it specifically. So must be recognized systematically over the year as the over the year with the passage of time. Yes, systematically. The risk is that the company may have recorded the whole or maybe recording the whole amount of receipt for the yearly plan as income at the time of income, while it should be recorded recorded as deferred income at that time in financial statements. And hence, sales may be overstated and what? Liabilities understated due to understatement of deferred income. Yes. Sales may be overstated and yes. This is how it should be written. Any confusion? Any problem? Now, students, the point is, yes, this point. What they're saying, this is something different. They purchased $12 million of pet food from a supplier with a sale contract stating that ownership of goods passed to Mercurio company at the date of shipping. During transit, the ship carrying the goods was involved in an accident which destroyed the entire supply of goods. Mercurio company's director had arranged, now you see here, insurance and policy. 80% of goods destroyed are recovered by insurance. Informal email, similar question we did. You see repetition. So first of all, that is the goods when they transit, when they are dispatched from supplier, they are the goods of Mercurio. Because contract states it is exceptional. Contract says like that. So they should record a loss of inventory. 80% destroyed. So 80% of 12 million, 9.6 material amount. We will discuss materiality. And we will say that now it should be recorded as a loss. Now, so student, the next point is informal email. Again, asset. So that is a separate event. That loss should be recorded. On the other hand, this insurance company, now intangible asset, we can record only if they receive virtual confirmation, the formal communication of recovery. Then it can be recorded as contingent asset because it becomes virtually certain. So similar question we did before as well. Now, Now, students, points are not straightforward. I'm telling you, we are doing right now simple, straightforward points because this is the first day. Points are a bit twisted points, and it is not easy to write about them unless you have very good practice, a lot of questions. Now, one more point we will see if we can write. You see here, this one. Students, see here. Listen, please. So, accounting issues we are talking about. It is first, okay, Ladder owns 50 hard store in the farmland. 35% is owned by the government. It means 65% is by this company. Okay, 65%. The group obtained 65%. So the point is, what is the risk? When a subsidiary is recorded? When? When there is control, more than 50% voting rights. But here the government holds 35%. So there is risk that and possibility that despite having 65% voting rights, this company may not, the government may be controlling this company. So despite having 65% shares, they may not be able to control it. So it may not be classified as subsidiary. It may not be fit for that. And it may not be need to be merged. So student, so this is the point. And the company may have recorded. So this is the risk. Now, now you see here. So here is the risk. Not we cannot say it is clear incorrect treatment. There is a risk. And the second point over here is, you see here, this penalties, provisions. proper amount, it should be recorded as per IAS 37. So they have recorded 22 million, which is huge amount. Claim from 25,000 customers have been received. So you see, MTI, it is all about that. I would suggest to you, please do one thing at home. Before coming for next class, this accounting treatment, if you can handle this the way I'm telling you today, if you can do this in this 1 week, it will fix your majority issues, the future of other topics as well. So I would suggest to you, please try question number 5, Pascal company. Okay. So in the next class, I will complete this risk of material misstatement or risk. So important is grasping what I'm teaching. That is important. Yes. Group. Significant risk of material misstatement. Yes, very good points. I would suggest you, please do not try to copy paste answer from the exam kit. You have to write 4 accounting issues from it. How many? 4 accounting issues on a Word document. And you have to send me via email. I'm sharing with you the email. Discuss MTI approach. Question number 5, Pascal. So I'm going to give you my email address. You have to send on this email address. 4 accounting issues as risk of material misstatement. Plus, you will discuss materiality as well, the first 3 marks for this question. So in the next class, the first 30 to 40 minutes, I will mark your script. I will tell you what mistakes you have done. Okay, students? That's enough for today. So please, I am waiting for your answer. See you in the next class. Till then,